In 1790, the entire US national debt stood at just $70 million, similar to the size of a small tech company today. Fast forward to 1980, and that number hit $1 trillion. So it took the government over 200 years to reach its first trillion in debt. Since then, it took only 45 years for debt to rise to $36 trillion. What used to be 200 years worth of debt accumulation is now done in the space of just 4 months. In the past year alone, the US government has added over $3 trillion in new debt. This is reshaping the entire financial system and affects not just traders or investors, but also savers, retirees, and wage earners. This chart shows us in real time the collapse of the value of our currency. Bitcoin was founded in 2009 with the goal of protecting people from this exact phenomenon. The question now is whether it can actually serve this purpose. To answer this, we have to understand what this currency devaluation actually looks like. In the 1920s, a typical home in the US went for $6,300. Today, that same home averages around $420,000. A dozen eggs went for 13 cents back then. Now, it's shot up to $6.20. And a loaf of bread went from just 5 cents in the 1920s to $2.80 today. The products haven't changed much, but the dollar's value clearly has. We can also see this through the long-term chart of the US dollar's purchasing power. In the last 100 years, the dollar has lost 97% of its value, and in just the past 5 years, it's lost 20%. Meaning, if you saved up $100 in 2020, it now only buys you $80 worth of goods. So everything now requires more dollars just to buy the same quantity from a few years ago. But the real damage to the dollar's value often doesn't show up properly in the official data. In fact, a lot of people feel like they have lost more than 20% of their purchasing power since 2020. The reason for this is that government metrics tend to downplay the impact by averaging out a wide range of goods and services. For example, the official inflation number might show 2 or 3%, but the actual rise in everyday expenses that the average person experiences is often much higher. That's why we like to look beyond just the reported numbers. An alternative way to assess the loss of purchasing power is to look at the price of gold. In US dollar terms, gold has gone up by around 1,250% over the past 25 years and more than 200% in just the past decade. That kind of performance points to a much deeper issue, one of steady erosion in the value of fiat currency. Gold is a great inflation gauge because it acts as a timeless benchmark. It gives us a neutral way to compare the price of everything we can buy, like groceries, housing, petrol, to something that has kept its value for thousands of years. Gold is just a piece of rock, but it's one that people across centuries and civilizations have continued to trust. And when we measure key financial assets against gold, the picture becomes clear. The value of US Treasury bonds relative to gold has been collapsing. Since 2020, this ratio has dropped by over 70%. This is a clear sign that confidence in US debt has started to fall quite aggressively. Even stocks, which are generally considered a good hedge, have been declining when measured in gold terms. S&P 500, the benchmark US stock market index, has declined by nearly 30% when measured relative to gold over the same time period. Bitcoin, on the other hand, has been thriving in this environment. The ratio of Bitcoin relative to gold has actually risen by almost 500% in the past 5 years. So not only has Bitcoin been a good hedge, but also it's arguably been a better one than gold for the US debt crisis. In fact, Bitcoin has built a strong long-term track record, having weathered the European debt crisis here, a global pandemic here, an oil shock here, a war here, and now a collapsing US Treasury market, alongside a historic shift in government policy and global trade. That's a solid report card by any standard. But there is one major drawback in Bitcoin that scares investors looking for stability from the debt crisis, and that has to do with Bitcoin's high volatility. For example, in the 2022 bear market, Bitcoin fell by almost 80% in just a year before going on a 600% rally. For comparison, gold only fell by 15% in 2022, before seeing a 100% rally. So indeed, Bitcoin is much more volatile than gold, both to the downside and to the upside. And we can also see that in this chart, showing the daily price change in Bitcoin and gold. It's evident that since 2012, Bitcoin has seen multiple 20% corrections and 20% rallies. Gold, on the other hand, has typically remained in a 5% up and down range. But Bitcoin is not yet fully comparable to gold, since Bitcoin isn't nearly at the same stage as gold is as an asset class. And early adoption always brings volatility. A more appropriate comparison would be to look at gold's volatility from the 1970s, when it had first become legal for private ownership. That's when the adoption cycle for gold as a financial asset actually began, as it moved from being a tightly controlled asset by governments to becoming a freely traded store of value. Now, if we look at gold's price from the 1970s, we can see that it actually saw multiple 15% to 30% corrections, like here in April 1974, April 1977, March 1978, and November 1978. In fact, gold also saw a 50% drawdown between December of 1974 and August of 1976. So, from a volatility standpoint, even gold experienced quite severe corrections throughout its early phases, similar to Bitcoin today. But as gold's adoption became more widespread in the following decades and it became a part of the everyday investor's portfolio, the high volatility cooled off. For instance, we can see that by looking at gold's uptrend from 2001 to 2011, where gold only saw two pullbacks of 15% or more in an entire decade. Even during the 2008 global financial crisis crash, gold was very quick to recover, and we believe that Bitcoin is actually following a similar path to gold. In fact, we can already see signs of that today through Bitcoin's recent price action. Following the announcement on Liberation Day here, Bitcoin saw an 8% decline in the following week. Since then, price has rallied by over 25%, wiping out the entire drawdown seen after the tariff announcement. For comparison, the S&P 500 fell by 12% after the tariff announcement and rallied by only around 10% after. In fact, the US stock market is still below its pre-announcement level. So not only did Bitcoin fall less than the S&P 500 during this uncertain period, it also recovered much quicker. Bitcoin's resilience and lower volatility than even the benchmark US stock market index in the face of the recent crisis will significantly increase confidence in the asset class. This is likely to set the stage for Bitcoin to thrive in the coming months as more institutions and other big players take Bitcoin's resilience as proof that this asset is here to stay, and more importantly, that Bitcoin does indeed provide a real hedge during times of crisis, just like gold has shown to do so. By the way, our crypto membership has allowed our members to lock in a 140% profit with S-Lock and a 50% profit with Pcane in the month of March, despite a tough crypto market. We designed the service for it to provide everything that new traders need in order to be profitable. Initial trade plans, buy and sell alerts, real-time market updates, and educational tips. Click the link down below to join our rapidly growing community of traders.